Well, hello everyone. I'm Raj Kumar, President and Editor-in-Chief of DevX, here at the World Bank and IMF Spring Meetings. This is a very busy week for everyone involved, but especially for the two people sitting next to me. So thank you for taking some time. We have Axel van Trotsenburg, who is of course the Senior Managing Director at the World Bank, and Anna Bjerde, who is the new Managing Director for Operations. To the people who are following this, who know the World Bank, your names are very familiar. You've been at the institution for a long time. I said new just because you just switched roles in a way. You were the Managing Director for Operations, Axel, until the beginning of this month. And Anna, you left a previous role inside the bank to take on this new one. You're two of the top leaders at the bank at a pretty exciting, consequential moment. And these spring meetings display that. I mean, maybe the audience can't see it all, but this is a buzzing environment because there are so many people interested in what's going to happen at the World Bank. What are these reforms? What's the shift in leadership all about? So Axel, maybe I'll start with you because you've been here a long time. You've seen it all in a sense. How different is this series of reforms, this movement, this change in leadership? How big of a deal, how significant is it really?
Well, I think it's a big deal. I think we have been scaling up enormously our ambition during the last 3 years and delivered. And what we are seeing is that we are badly off track with regard to SDGs. Climate is off track. You see increased fragility, more conflict. So there is an enormous agenda out there, and people are concerned that we are not undertaking collectively the investments that we need to do. And therefore, I think everybody needs to think how you can do better, more, and raise the ambition, because otherwise these 2030 goals remain elusive. And that means that also the bank, having shown that we have the ability to lift our game significantly, how can we do more? And I think that is the part of the discussion, but I think it is really also that we stay laser sharp focused on the short-term crisis support with the long-term agenda. And we have been doing that in the crisis time and want to do that. And so we want to engage our shareholders, but also civil society, to see how we can strengthen that coalition in the interest for developing countries, and then ultimately translate this into a very ambitious work program.
So we heard, Anna, from Axel here, the word ambition a few times, right? And that seems to be the cultural shift that may be happening at the bank, this idea that we are going to be much more ambitious. It's almost a strange circumstance where you now have the shareholders, in a way, saying, take more risk than the bank itself. Usually it's the opposite, right? The shareholders are saying, be more conservative. You now have many shareholders, not all, pushing the bank to be more aggressive. What is that going to mean operationally? Right? There's a $300 billion loan portfolio that you manage. What will it practically mean? How will things look different when we gather again, either in Marrakesh in October for the annual meeting or back here next year? What do you actually expect to change?
Well, I think what Axel described is exactly right. We're living through incredibly unprecedented times, and for the last 3 years, the countries that we work for, our clients, have had enormous challenges. So during COVID, of course, we stepped up. We were there, we were responsive, we increased our support, both financing, but also knowledge, technical assistance. And then we had a little bit of calm, and then we started seeing an increase in energy, increase in inflation, and then of course, Russia's invasion of Ukraine, which has had huge regional and global spillovers, has put a lot of development gains back even further. So now 3 years essentially of instability, surprises, crisis, has been really, really difficult. So we've stepped up, but at the same time, what we're seeing is that these global challenges, whether it's climate change, which clients are feeling every day, or it's the pandemic, which came as a surprise to the whole world, no one was prepared, or very sadly, what we're seeing an increase in conflict, and add to that the fact that we now also have a surge in debt, and we have migration. So we have so many issues to deal with. It means that we need to continue to do more. And to be able to continue to be more, we need to be more ambitious at every level. We need to be more ambitious with our business model, which is what I'm going to focus on. And we need to be able to have more resources for our clients.
So let's just talk about the business model for a second, because the idea of crowding in private investment is not new. The bank has been working on this for a long time. So what will it practically mean to go to this billions to trillions agenda? When you say the business model will change, how exactly?
So the World Bank group is unique in that we have three parts. We have the World Bank, we have IFC, and we have MIGA. And each part has stepped up. What I think we have an opportunity to do even more is to even more upstream look at the opportunities and the challenges for our clients and to work even more closely as an institution, as three institutions together to serve our clients. But not only our World Bank group, with all the partners too. So this is something I'm appreciating with these spring meetings. We have a lot of partners here who have the same ambition we have, which is to really help our clients, to do more with partners. And then this morning I spent the morning with parliamentarians and then with civil society. These are also partners in the development world, right? In the agenda we're trying to help. So I just feel like we need to do more with more partners, with more interlocutors.
Axel, you're co-chairing this evolution roadmap, as it's called, this reform agenda. And there's a tension between bringing in new capital, asking the shareholding countries to contribute more paid-in capital, and this idea that there's an opportunity to do some kind of financial engineering to increase the risk perhaps on the balance sheet, or to just take existing things like guarantees and do more with them. Where do you fall in that tension? Where do you think, because there are people who say, we don't need additional paid-in capital. You know, at DevEx we recently interviewed a member of Congress who had that view. Let's just sweat the balance sheet more, let's be more innovative. Where do you lie in that tension?
I think, look, I have done twice the replenishment for IDA. I've done the capital increase. There's always an importance that we try to optimize the internal resources. And I think the most spectacular balance sheet optimization was done in IDA, that we actually developed the possibility of IDA going to capital markets and FAAA, and through this increase our support program to these countries by over 50% when we introduced it, and now we are almost 90% above that level pre. So this is very good progress. I think also, trust me, that also at the capital increase in 2018, we did a lot of balance sheet optimization, but there are always also things that you can do as well. What I think the bottom line is what Anna just said is, when you look at the challenges in the countries and the global challenges, then the investments needs are enormous. If you say, look, I want a couple of $1 billion more, you will find somewhere a couple of billions. But what you need is a sea change if we want to make a difference. And then you will need to invest. If you believe that actually multilateral organizations can make a difference, and we passionately believe that the World Bank can make that difference, then you need to invest. And there are two things before that. It is not only looking at the IBRD, okay, that you do a capital increase. That in fact involves actually very little capital for the shareholders. But what we need more also is real taxpayers' money for the poorest countries. And there, yes, that is where we will continue to push all the membership, because that solidarity with the poorest countries is more needed than ever. The crisis have hit them disproportionately, and therefore we will not stay silent to say you need to do more for the poorest countries.
Yeah, and it's that crisis is not over for the poorest countries. It's ongoing, and there's this cliff, as they call it, for IDA, right? Can you talk about what that is and when it's coming?
There are two cliffs. There's one is that we did in the IDA 19, we truncated a 3-year period into 2 years so that we could give more support. The IDA 20, we also slightly front-loaded, and that means that if the resources remain the same, it will be less in the second and third year. Given the multiple crises, and the latest being food crisis, we feel that we need to step up. So we have been proposing a crisis facility so that we actually have the ability to provide that additional support. So we are engaging our IDA donors, and we will engage them through the years, because at the end of the year is also the midterm review. But we feel we need that extra support for the poorest countries. The second one is the way we designed originally the introduction of us going to market is that we actually had the equity advance to put the down payment for the SDGs. So it was always expected that we would run out of capital by 2030. Now, the problem is that we have advanced some of the things, so we actually need that money because then at 2030, the SDG targets will not be achieved, and that means we need continued large investments. And that is where the donors need to prepare for themselves. And since they don't go up from one day to another, like doubling their commitment, you will need a pathway towards that greater contributions post 2030. And that is the second.
So there's a short-term challenge, and then we have to look out another 5-6 years.
That is correct.
Interesting. Now, you, Anna, soon will have a new boss in this building, right? Ajay Banga almost certainly has the job. He's the only nominee. When he comes, of course, he's going to be out there trying to get more money for the institution. There'll be the IDA capital raise and other funds he's looking for. But a lot of the critique of the bank in this moment is the bank moves slow. It's not fast enough, right? And borrowing countries might say, there are other sources of capital out there that move more quickly for us, commercial capital or other sovereign capital. What will be your advice to a new president? Does the bank need a new structure? Is it a new culture, new personnel? What's required to not just have the financial engineering and the new money, but the speed and agility for this moment?
So I think we certainly have experiences where we have moved very, very fast. And if you look at some of the responses we do when there's a crisis, we move very fast. I mean, just as an example, the pandemic package we put together, we moved very fast, both in terms of the preparation and the actual resource flow. So dispersed and really delivered results. The second one I was involved very recently with was, of course, the World Bank's very significant response to Ukraine. 11 days after the invasion started, we were at the board with a $730 million package. So we can certainly move fast. And I think what we see is that and we're moving fast, by the way, without any sort of, shortcutting on our procedures, because I think what's very important with the World Bank is that we have very robust procedures when it comes to environmental and social assessments, when it comes to fiduciary assessments. And these are important for development because you need transparency and accountability in development. So I actually think we can uphold the standards of the World Bank, which are so important, and we can move fast. So what I will be looking for us to do is to continue the high quality of our program, both our lending and our portfolio, but to be incredibly responsive, because this is a very difficult time for all of our clients around the world, and we need to continue to be there for them. And that's really what I'm going to focus on. Speed, yes. Quality, yes. And making sure that our portfolio is absolutely relevant for the issues that they're facing.
Axel, what would you want to say to World Bank staff? You've got this 17,000 person organization. They're all looking at this moment of leadership change, of an evolution roadmap. What should the team here know about what's coming?
Well, first of all, I'm incredibly proud of the staff. They have gone way beyond what was needed, and they delivered. And so I think this has been a team that has gotten together. We have been for each other during the COVID time. So I think that team spirit for me is the strength. Also includes the diversity of this institution. I am proud that we have everybody here in there from regardless of nationality, color, sexual orientation. This is what the World Bank, and it's the strongest point. What we need more is that we realize that countries need more. So we need to do that step up. And whether that is in the operations or in the global practice or in our finance, we need to do more, and we need to see how we can do that better. I have seen there is an enormous resourcefulness in that. And so I have seen that with some of the reforms we did among ourselves, that we can really capture that. And so what I would like to see is, can we actually think of new approaches? I think on the digitalization, for example, I'm now talking with colleagues in our departments about introducing AI. So there are things, and this is also a big motivations on this. So we need to move. This is an organization that stays on the move. and that wants to keep the ambition and understands what our responsibilities are. And that is what I would like to transmit to them.
I could see ChatGPT write the loan documents for a deal in the future. I could imagine that.
I think we will be more intelligent than that, but we have already tried that, but we will move beyond that. Stay tuned.
I'm going to let the two of you get to your next sessions because this is a very packed day. But would you agree with me? This is a spring meetings unlike any other. You've been to many. This is a really different one. Would you agree?
Yeah,
yes, absolutely. Yeah,
absolutely.
It is.
Well, thank you for taking some time to have this
Thank you.
conversation. We'll continue covering this incredible session. Thank you.
Thank you.
Wonderful.
Thanks a lot.